Ladies and gents, we're starting early, which is what you guys get for being in the driver's seat early. How's it going? My name is Andrew. We're just getting started. I'll be with you guys in just a few minutes. Hold on, relax, and make sure you got your attendee dipping sauce ready. AMC is already off to the races. Up 2.5%. Where else will it go? Let's find out. We got Pam the Realtor. We got OD Wraith, numbers, letters. We got J-Rod, Mad Hatter, Andrew Hall. Before I show up, guys, make sure to slap that like. Tell your friends. I'm trying to get that algorithm defeated. Meatball just got his morning meal and water, so his din-din's getting ready. AMC is already pushing back 3%. We already saw it 39.62 just on this stream, so we're going to keep watching it go. I'm going to be coming on faster, probably about in a minute or two. So disregard the timer. I'll be coming on in just a second. Good morning, ladies and gents. Let me turn the music down a tiny bit so that you guys can hear me okay. Hey, how's it going? My name is Andrew. I am a data scientist here in Silicon Valley, and we are here because you guys have been here about 20-ish minutes. We're looking at AMC pushing up to new levels of the resistance is $40. We haven't been able to see that since news of estate planning from Adam Aaron. Let me get rid of this timer. You probably have also seen that the EV wars are full blown. We had a RIVN IPO yesterday, which means I'm not sure if you guys were able to catch that IPO fever, but it is today up 16%. Yesterday, I was looking at it at $95, and that was right. That was the bottom. Luckily, we were able to use the tools at our services to be able to figure it out. This timer is counting down, but it really is counting down to a quick little video about Disney. Disney is currently down 7.6%. Is it a hot buy? Why exactly did earnings hurt Disney in such a way? And what can we learn? Because we're here to make that moolah. But first, let me say hi to some of you guys. BTS Sandwich, we got Numbers Letters, Kelly Jenkins, we got Tom, Chris F, Andrew Hall, we got Craddock, Love God Neighbor, Farima, we got Randy, Crystal, and Riptide Redemption. Cool names, guys. Let's take a listen.
Well-covered story last night, Jim.
Yeah.
The long-term sub target remains unchanged, but not adding 12 million a month, that's for sure.
No, and look, the problem with Disney is how convoluted this story is. There was a conference at Goldman Cornucopia where Benjamin Swinburne, and also I regard as being terrific, from Morgan Stanley.
Going to join us later.
Yes. Oh, yeah. Well, that's good because you can ask him. He did lower the forecast of how many people would sign up for Disney Plus. Said it was the low end, and that's basically what happened. Swinburne adjusted his numbers; others didn't. I don't know why people are not focused on two things: the new content that's coming from Disney Plus and the theme parks, which are doing quite well and will do much better. I think that people are being short-sighted to sell it. My child just owns it. I was eviscerated on Twitter this morning for being stupid to buy Disney, even though, of course, I bought it at 109. And I come back and say, David, that the reports of Disney's death are greatly exaggerated.
And I'm sure you're correct in saying that. for the longer term, but that doesn't mean there isn't going to be a reaction in the market. And I think there is one key thing here that investors are reminded of yet again when it comes to these direct-to-consumer businesses, which have become really the heart and soul of so many of these content companies. The key thing that we measure them on, whether or not you want to talk about, in the case of Disney, box office, or even more importantly, theme parks, it's still going to be DTC. They're really...
Theme parks. I'm going to be in a theme park soon. I'm going to be in a Disney Parisian theme park. Haven't been to a Disney anything in a long time, obviously, but just also out of budgetary choices. What do you guys like to go? I'm interested in thinking about, we talked about how you would use your tenders for good. You guys are going to be using the gains from your investment journeys for nonprofits and starting businesses and creating enterprise. But what kind of amusement, let's say, would you use? What kind of money would you spend? Would you guys go to Disneyland right now? Disney probably needs it. So is this an opportunity? We'll talk about some of the technicals, and we're going to talk about what other earnings calls there will be coming up today. Let's take a look at AMC, already coming up on that bounce, 3% up. Honestly, this month has been an excellent one if you are tossing your money in the stock market these days. AMD up 2%, Wind Resort up 2%. We got Lucid rising up to meet the EV expectations. And those are some heavy expectations right now, currently at 9% up. NEO is not far behind, about 5.5%, now 6%. Dash continues to run after a stellar earnings call. It's about 7.5% today after an impressive week. And then Sundial today, up 5%. UEC up another 6.9%. UEC, we called it a couple months ago. It feels good. We have another research report coming together for next week, so be prepared for that. It's going to be about silver. Oh, there's that timer. Thank you, timer. Brendan Burns, how are you, Uncle B? Good to see you. We got Chris F. Now, it's time to elaborate something. How does Elon selling a lot of Tesla help AMC? We've talked about Tesla and AMC as well as GME trending inversely to each other with Tesla stock. And that's this was all the way back months ago when we saw that anyone who were trying to short AMC and GME would have to unload some of their Tesla. And we're talking about financial institutions, we're talking about short sellers. They would need capital some way. Tesla at the time was the fattiest cow, so they would cut down their Tesla stake in order to short AMC and GME. So what we were hoping to see was that Mr. Papa Elon takes a stake in AMC so that he no longer is, he just won't abide by that inverse correlation. That's annoying. Zero Guitar Hero, what's going on? Vincent Lee, what's going on? Kristen and BTS Sandwich in the same chat? Patrick Motley says, I got a fever. The only cure is more cowbell. Happy Veterans Day. Happy Singles Day. What are you guys doing today, depending on what part of the world you guys are on? Hopefully, you guys are remembering that some of us were able to stay home. Some of us were able to, stay safe during the pandemic, but not all of us. So thank you for those of you who've served. Thank you for those of you who continue to serve each day.
Expensive. They're really cost costs an awful lot of money, and Swinburne himself in this.
Watch RIVN, by the way. I'm going to put it on the top left. 18% already up and blowing. This is up from when we just talked about it a few seconds ago.
Note this morning says we expect Disney to ramp up Disney Plus content spend from about $3.5 billion in fiscal year 21 to likely $10 billion or more by fiscal year 24. They had a $9 billion forecast previously, and it's important to reiterate. Yes, we're going to measure their Discovery and the Discovery Warner tie-up and Paramount Plus and on and on.
Hey, you guys remember the scissors in the chat? We always used them to cut out paper hands in the past, but now is more important than ever. Throw some scissors, it's an emoji in the chat, and then go ahead and look down to your left and to your right. Those people have already slapped that like button. Let's try and defeat that algorithm. Let's try to get up 1,000 people in here. 120, RIVN has just broke. Oh, now that $95 entry point. Feeling better and better. Let's take a look at Lux algorithm in a second to see where RIVN could be hitting a potential sell signal. This is Lux algorithm. It's currently on Lucid. So Lucid had a strong buy earlier today around 42 bucks. Would have gotten you up to 10%. Great. Let's take a look at RIVN. RIVN. Those of you who bought IPO day seem like you guys are in the right place. However, it's already up to the third Bollinger of overbought. That is $120 right on the money. So it's come down about 70 cents already, so be careful because there's no sell signal yet. Maybe on the minute chart. Yeah, on the minute chart, it's already over its last overbought Bollinger. Careful.
But man, it costs a lot of money.
No, I think that's a great point. I think people. I'm not saying I was surprised by this. Okay, and by the way, the stock moved up 5 earlier this week. It's some sort of like ridiculous belief that everything's all well. But I think that
that's what AMC did
at the beginning that I had a longer term view. And I think that once they spend this, it'll be similar to what happened to Netflix. Netflix spent a lot. When you found out they were going to spend a lot, Carl, you basically said to yourself, I got to sell Netflix. And then they spent, and it worked. And then you get a Squid Game. Now, I don't think Disney's going to have something like a Squid Game.
You get a Squid Game.
Bambi Game, Squid Game. But there is a genuine belief. Oh, by the way, I think that Musk played us. It was the Squid Game over stock.
Yeah, I heard you say that.
Yeah.
Watch RIVN's MACD. It's flattened out. It looks like it potentially got into its peak. The MACD crossover might be imminent, coming down to a major dip. Unless RIVN can catch a break. It doesn't look like technically it has any mustard left. Riptide Redemption, throwing those scissors. Numbers letters, throwing those scissors in here. Tom. BTS Sanders told a story about a fox. I saw a fox when I was camping. It was supposed to be a good sign, and then I came back to beautiful earnings and everything went down. I blame the fox.
Yeah, that kind of a tug of war scene. But I just tomorrow. Look, I just think that Disney Plus is going to be very good. It's going to have fresh content. Actually starts tomorrow with Shang-Chi, Legend of the Ten Rings.
Shang-Chi,
which by the way has a Chinese villain. So therefore, the Chinese won't show it.
I mean, you're getting to a point, Jim.
The Chinese won't show it, but it's about China.
A very important one, which is Squid Game's not going to be on Disney. They're not going to have that kind of show.
No.
And does that limit the TAM? Barclays today argues, and by the way, they take a victory lap because they downgraded last month. They argue that they've had plenty of content. They've had plenty of content all year long, and maybe relying too much on their franchises.
Well, look, I think every one of the objections is for real. I didn't hear anything other than the fact that maybe you should have realized some of these things after I love that cornucopia, the Communicopia conference. You used to go to that.
I used to, yes, the old Goldman Sachs Communicopia. Well, they haven't had it in person in a couple of years, so it's kind of hard to go.
Right, that's true. That's true.
You can go to the office, but you can't go to the conference.
You can't go to Communicopia.
Yeah, you can go remotely, yeah.
But look, I'm going to stick with it. I've been working with Jeff Marks, the research director for the club, and we just think, look, take a little longer view. The consumer's going to come back. Jungle Cruise. I mean, I've got lots of things that make me feel like that this is iconic, and you don't give up on iconic. Even though I do wish that they had something like Squid Game, and not the marble scene. That was just unfair.
Well, Disney has set parameters for the type of content they're going to put out, and it's not going to be something that violent, clearly. Chapek talked about some of the long-term growth drivers that Jim's referring to. Take a listen to this.
We reaffirmed our guidance of 230 to 260 million households, and we believe that there are two primary drivers of that growth. First one is going to be the expansion into new markets. We're going to double the number of markets that Disney Plus is in international territories by fiscal year 2023. And the second component is obviously going to be new, fresh content across all of our wonderful Disney franchises.
One interesting point was his mention of...
Seems like Disney still hasn't caught a break since all of this recovery mode was all the way up down to $158.34, $3 lower in the day. This was after a dismal after hours where the stocks dropped upwards of 10% already. And now Disney's has an opportunity, surely. Now I feel like the Disney play that I had in mind, shoulda, woulda, coulda. Definitely should have thought about earnings being negative. You know, this is the time to play the options chain if you understand it. A couple of puts or even selling some calls would have been a very nice play.
About the Disney metaverse.
Yes.
Tom Rogers this morning saying, why would you emphasize that when you've got real world experiences that are unparalleled? By the way, theme park revenue 2x.
Yeah, I mean, theme parks obviously opening up in a very more significant way, and the fact that we've got now 5 to 11 being vaccinated is going to be even more significant. As you hear the applause build here, I believe we're going to have some celebration for obviously the holiday today.
Okay, they're doing the clapping thing on the stock floor. Look at this $120 double top for RIVN. Doesn't look like it's going to dip below its SMA anytime soon. However, it does look like it's playing a dangerous game right now, chicken, with the consumers. Okay, let me see if I can find a less noisy clip about what has gone on the last day or so. You guys know that RIVN IPO happened. RIVN went to a low about $95 yesterday. Now it's up to $120. How much is this actual change? How much is this EV war hype? And how much is this going to be about building on existing trends? Is metaverse the next big thing? Hold on a sec. Who is RIVN's billionaire founder, RJ Scaringe? Scary name. Brennan Burns saying, not asking for me, obviously. Asking for my wife's boyfriend who has been entertaining only and working out like a demon. My fave. My fave Jim Cramer line. Uncle B, you still got it. Alright, EV startup. Here it is. RIVN. Okay, there's that AMC news. Okay, metaverse. Talked about that metaverse video coming out soon. Let's take a listen.
Strong earnings from Roblox and Unity Software this week have intensified the conversation about the metaverse. Well, what is the metaverse? Should be investors be bullish on it? I'm told this is actually John Ford. Here to weigh in on this.
It's true.
This is not a simulation. You're not some kind of matrix thingy. Could you just? Well, I see you just like stopped like a.
Well, no.
That was a great joke.
No guarantees there. You might see that Max Headroom style, like kind of right. Yeah. But
BTS Sandwich says, I've been eyeing Disney stock forever. Why is it tanking? What's going on? Missed earnings. It's all about earnings. Disney is just not cranking out enough Squid Games, as you've heard Jim Cramer say. But now we're talking about the metaverse. We'll come back to Disney in a sec.
But it really is me, Joe. I'm very excited about the metaverse. I'm glad you. The metaverse is an immersive 3D virtual space where you get to have real experience. The concept has been around a long time. The novel Ready Player One came out 10 years ago. The virtual world's Second Life arrived almost 20 years ago. What's new, though, is that technology is finally good enough that these digital experiences are high quality and not just for low-level video game entertainment. Virtual reality headsets are now affordable. Cloud technology makes it possible to create deep virtual worlds that millions of characters can inhabit. And probably the most important piece here is commerce. Early metaverse experiences like Minecraft, Fortnite, and Roblox are immersive and social enough that
Roblox. What's up, Hybach? Good to see you.
Real money on digital merchandise. You combine that with digital transaction concepts like blockchain and NFTs, and the potential's clear. I mean, Facebook changed its corporate name to Meta because the metaverse is where tech is headed, Joe.
All right. So you're not an avatar. So you say. Sounds exciting. But haven't VR headsets, all these things, multiplayer online games, they've been around for a while. What pushed us over with all the hype right now?
That's a good point.
Joe, I mean, on the other hand, maybe this metaverse stuff is just the latest marketing boondoggle to distract investors. Here's why Facebook rebranded as Meta, because angry old people spent the pandemic soiling democracy on Facebook while quarantined young people socialized and gamed together in Minecraft and Fortnite. Still, look, the metaverse is not the next big thing. Sure, next-gen gaming platform and tool companies like Epic and Unity are huge. Innovation in graphics processors from NVIDIA, AMD, Apple, and Intel are important. Cloud technologies form a connective tissue that makes these experiences possible to deliver. But this metaverse narrative ties together real business successes like these and wishful thinking like the idea of mainstream AR and VR headsets. I mean, we've all got Zoom fatigue from interacting through screens all day and mask fatigue from walking around with our faces covered. This metaverse narrative would have you believe the trillion-dollar future is we're all going to want to cover our faces with interactive screens and work in the metaverse. No thanks. There are some great ideas beneath this metaverse hype, but the overall metaverse narrative is more Google Glass than Google Search, Joe.
Is more
I think
Google
you just took a
Glass.
stand, John. I don't know. You just
Wow.
seem more. I don't know. You seem more animated about the other hand side of this. How do you think investors are going to tell the valuable parts from the hype?
Well, Joe, tech does this every once in a while. Big tech companies decide to put a bunch of marketing dollars behind some idea, and sometimes it's too soon. Like 10 years ago, smart cities, and really, it wasn't time for that yet. You really got to watch where the demand is, where the end user demand is leading, not just where, oh boy, if we want to connect all these dots, this should be what the future is. The future that a big company thinks should arrive oftentimes doesn't.
So I wanted to be able to talk about the metaverse in the context of whether or not it's being overhyped, which it is, but also whether or not it
Bitcoin,
is
and
rightfully
Ethereum.
showing you a check-in of what is coming up next. SEC's upcoming spot Bitcoin ETF deadline. So Bitcoin had a pullback recently. You guys probably saw it. Bitcoin went all the way up to 69,000, came all the way down to 64,000 and change. Ethereum still seems to be pumping up ahead, 2% up on the day. SHIB was all the way up 10% earlier. Now it's 8.7%. Dogecoin up 3.5%. Other notable winners today are SoFi. Look at 16% up today. We have that's just on another positive week. We got Lordstown Ride is up 16%. Take a look at RIVN, still running up to 122.28. Now we are getting into severely overbought territories. However, it has consistently held at $120 range, which means it is showing bulls the strength it needs to continue moving forward. So Bitcoin usually does retreat around this time of year. But when December rolls around is when Bitcoin gets to oftentimes its records. So are we going to see another 70,000 record before the year is over?
Reached all-time highs yesterday as the SEC is set to make a decision on a new Bitcoin ETF. Joining us now, Kavita Gupta, FinTech TV co-founder, founder of the Delta blockchain. The deadline's this time for a spot ETF. We have futures ETFs, but there are some pessimists that put the probability or the possibility at zero. Kavita, is there any way, given comments from SEC Chair Gensler about there's no clear delineation of which agencies would control or regulate a spot ETF? With the futures, you have an agency that oversees that. So it's not going to happen, is it? For years, probably.
Hey, Joe. No, I think the part of my job every time I come is like keep on saying, no, it's not going to happen. I mean, look at the market, right? If that would happen, think about where the inflation is going to go. Already the government is thinking about taking care of inflation by just printing more money, which actually drives more craze for the cryptocurrency, especially Bitcoin and ETH. So I really, really doubt with the comments with respect to any regulatory problems that it's ever going to go down to zero.
What is the rationale for not allowing a Bitcoin futures based short ETF? That just, it doesn't seem logical that if you can have one on one side that it's almost like they're protecting investors from the possibility of people ganging up on Bitcoin, which maybe they'd be likely to do if they're totally skeptical.
It's always anything which you have in control and you're ready to lose. Nobody's ready to lose the control, and governments have always been like this. We just saw in the future, the day the future, basically the options came out for Bitcoin, it went crazy. Whatever the limit was, it was oversubscribed. And I think that's what's happening. More and more governments are realizing that people are not really valuing or trusting their own currency over Bitcoin. And I think that's one reason I think is the problem. The second reason, I still think there is a sort of a power dynamics going on between CFTC and SEC based on who really governs what, and where do you extend that power to let things happen. And I think the lack of coordination out there is also one of the major problems here.
There have been all these sort of data points that have caused a real bullish move recently to new highs in Bitcoin and some of the other cryptocurrencies, whether it's, we have the new mayor-elect in New York talking positively about it, in Miami vying for the head of the crypto, or the center of the crypto world. But at the same time, in the infrastructure bill, there's some really bad things for Bitcoin in there. Are people ignoring it, or it doesn't? I guess it doesn't happen until 2024, and things can change. But could you go over some of the provisions in there, and they're pretty, they're not good for the space.
No, they're definitely not good. So first, I want to say a big shout out to the mayor-elect for New York City to be so bold and say New York always does big things, and he's going to take his next 3 paychecks into Bitcoin. That's a really big move. Kudos to him. But looking at the infrastructure bill, Joe, and we have talked about this before too, you cannot tax non-custodial wallets. You cannot tax every part of moving. As I said also before, every house has a modem and a router. You cannot tax modem and router to provide Wi-Fi to your house. And this is just one of the top things in the infrastructure bill. You can also just not go after people just within US. So if I'm a US citizen, I'm paying capital gain tax, I'm paying income tax on the non-realized gains coming out of crypto. While if I'm sitting in Portugal or if I'm sitting in Dubai, I don't.
So I want to be able to talk about the SoFi CEO, because you guys know SoFi is up 16% today. Might get its own dedicated video coming out later today, because it's what I use for banking, which is also up 14%. So SoFi is right here. RIVN has now started its plummet. Hit the 1, 2, 3. Hold on, what did RIVN hit? 1, 2, 3, 4, 2. So RIVN hit the 122.42 and then coming down below its SMA here. Catching a break, it seems like. All right. The RIVN, keep your eye on it, 16% up. Another 16% up stock is SoFi right now, already holding that 16% up after a topper today at 24.65. That's the daily high. Yeah, it's just something to keep your eye on.
The better than expected numbers, but I think maybe two of the big areas that really jumped out for people is in terms of the membership. 2.94 million members from 2.56 a quarter earlier. Products, 4.27 million versus just 3.67 million a quarter earlier too. And those are two of the areas that I think are really keying off things. What happened in terms of where you found membership growth, and secondly, what all these products are, what you're putting out there?
Well, first, Becky, thank you for having me this morning, and thank you to all the veterans and first responders around the world that have either given their lives for our country or defending our country, or have previously defended our country. I want to acknowledge all of them today on this Veterans Day. It's also a special day for SoFi. This culminates a year of us achieving many, many milestones in an all-out sprint. And the results yesterday really reflect the hard work over the last 4 years. We had record revenue. We're able to deliver that record revenue because we have such a diversified business. So unlike a lot of companies that may have fell short of investor expectations because they're only in crypto or only in trading or they're only in lending, or they...
This is a pretty good video. Oh look, SoFi CEO has just been making the news rounds.
Benefited disproportionately from staying at home, and now we're in a reopening trade. We have businesses that benefit in all those different environments, and that's why we hit record revenue. On the member and product growth numbers, everything's really coming together. Our marketing, our product, our ability to communicate in our app to our members, to help them get their money right by giving them more personalized offers. We are the only one-stop shop for digital financial services, so it allows us to meet members when they have a need. We want to be there for whether it's the most important financial decision in their lives or the days in between. And that ability to serve them across the product selection is really, really helping us, and communicating to them and building trust is also starting to play in.
Yeah, your product growth outstripped even your membership growth. So walk me through that. Like, what type of products would you be offering to a member that maybe they would pick up on?
Sure. So we are a one-stop shop for financial service products on a digital mobile platform, the only one that I know of. We provide loans like student loan refinancing, mortgage, unsecured personal loans, and in-school loans. We also provide brokerage, so single stocks, fractional shares without commissions. We have 6 of our own ETFs that are customized for our members and their needs. We have robo-advisory accounts. We were just named a number 1 robo-advisor by Barron's. And in addition to that, we also offer cryptocurrency. We also have a product called SoFi Money, which is like a checking or savings account where you can put your direct deposit and then pay all your bills or pay your friends. We also have a credit card. In addition to that, we provide home, life, and auto insurance through partnership. So broad-based products, we want to meet our members when they have a need and then build trust with them through our best-of-breed products. And when they have a second need, we have that product for them. So members are individuals, and then products are the number of services they have with us relative to members.
Anthony, you mentioned in the release that you were able to come out with these stronger numbers despite what's been a depressed arena for student lending. Walk us through each of those areas. Where do you see big growth? Where do you see some areas just overall troubled, like student lending?
Sure. So the President Trump, former President Trump, in March of 2020, made an executive order where those with federal student loans did not have to pay their loan payments for the foreseeable future. That's been in place since March of 2020 and will remain in place until the end of January 2022. Our business has been cut in half as it relates to student loan refinancing since that point in time. But we're able to deliver the record results of revenue of $277 million because of the fact that we have strength in our personal loans. We built a home loan business that's still growing quite nicely. We have a technology platform business that enables 89 million accounts. Those accounts were up 80% year over year. So enabling other financial institutions to create accounts like ours so they can service their members. And then all the products that I mentioned are in our financial services segment. Those are all growing very nicely. So yes, our largest and most mature business, student loan business, is operating at less than 50% of where it was prior to COVID. But the rest of the businesses have picked up the slack and been able to drive really strong growth. And just as importantly, our outlook for the fourth quarter is calling for an acceleration in revenue growth to 49 to 55%. So we see the trends continuing.
Who are these new members who signed up over the last quarter? Where are they?
Yeah, we're really focused on what I call high achievers, not well served. These are people that have done well academically, they've done well professionally, but they've been left behind by our banking and financial systems. They don't have someone that can help them get their money right, to teach them to invest in their 20s so that they have the benefit of compounding. They don't have someone to help educate them on how much debt they should take out for their student loans when they go off to college, so they're not behind the 8 ball based on the income that they'll generate after they graduate from college, or they've accrued too much credit card debt as they've started in life, and they need to refinance to a lower cost term debt, or they bought a house, and when they're buying that house, making sure they buy a house they can afford, and one that will allow them to invest in their 30s instead of being behind the 8 ball. So we're going after millennials and Gen Z that fit that demographic. Our hope is over time we could serve a broader audience, but we have to be focused on one core target, now with them, and then expand. We're really seeing great adoption at the top of our funnel through everyday products like SoFi Money and people putting their direct deposit with us. That gives us a lot of information to help you better manage your money.
I think I like this part where he's talking about his target demographic, which is just younger people.
So we're going after millennials and Gen Z that fit that demographic, being behind the 8 ball. They buy a house they can afford, term debt, or they bought a house debt as they've started in life, and they need to refinance, or they've accrued a 8 ball based on the income and how much debt they should take out, so that they have the benefit of.
To become a CEO, you really need to be able to learn how to take a really solid sound bite. Otherwise, I'm just scrolling through trying to understand where you're working here. So let's talk about RIVN here.
My mission is.
All right, Kramer.
Now.
What's the case of RIVN?
I'm just trying to make a little money. My job is not just to entertain, but to educate, teach, put days like today in con.
He really does say entertain first.
$1 billion company born right before your eyes. But that's exactly what happened today with the infant that is RIVN, the electric vehicle maker that just came public and initially reached a $100 billion valuation when it first started trading this very morning. Yep, on a not so hot day for the averages, with it down declined 240 points, S&P sank 0.82%. The Nasdaq nosedived 1.66%. At one point, it's much uglier though. RIVN stock shot up nearly 30%. though closed below the price of its first trade. Now, I know it's jarring to think that this company, which had only delivered 156 cars as of the end of October, is basically the same size as the market capitalization of General Motors. However, I am sick of this. Because, you know what? Because that's a terrible comparison. I mean...
Okay. Here, let me just make that SoFi video for you guys. One sec.
Compounding. They don't have someone to help educate them on how much that they have the benefit of compounding. Can help them get their money right, to teach them academically. They've done well professionally. All high achievers, not well.
Last quarter, where are they?
Yeah, we're really behind the 8 ball.
Here's the voice clip.
So we're going after millennials and Gen Z
that's it.
Invest in their 30s instead of being behind the 8 ball.
Okay, so now that I have that, let me pull a little bit of data. So this is the case for SoFi Social 50. All right, let me just make sure I can fit this whole thing here. Inexpensive access to online investing coupled with troves of readily available information in online forums. They're taking action to identify trends and what's hot in the market. Cool. Okay, sweet. And finally, I think I need a updated SoFi link. Thanks for bearing with me. AMC currently bounced the same time. Yeah, we got AMC twice. Bounced the same time that RIVN did. Here, we'll pull RIVN for a second and then we'll pull SoFi. RIVN dropped from 122.42 high, but now coming right up to its simple moving average. Could be an opportunity for it to break up again or come back down to its VWAP, currently at 114.35. So watch the levels, 122 and 114. All right, Disney's still trying to find resistance. Got rejected by the EMA. I had a feeling, which means its next level of support is 160 flat. All right, now let's look at SoFi. Focusing. Is Disney showing a buy signal? I don't think so. It's underneath its EMA, but we can check in just a hot second. Okay. Let's see. No music. Wisdom of the crowds. Moon Platoon, I have a quick question. Do you guys know where your money is right now? It's 5 a.m. You guys are trying to invest in things that will give you your financial freedom, but how are you going to hold all those monies? Well, there's a couple of ways that you can choose great brokers, you can choose great banks, but how about wisdom of the masses, right? Invest in what individual investors are actually buying, and this stock is running high, 17.5% as we speak. SoFi hitting that $24 resistance the second time today. So you might see a little bit of pullback, but that's healthy, which means you guys are just now going to get an opportunity to invest in this stock. I have the data pulled up right here. I have an interview with the CEO talking about his core demographic, which we are going to start with right after I tell you. It's important to slap that like button. Why? Because you look to your left, you look to your right, those two people have already slapped the like in order to destroy that algorithm, which means you guys watch to the end, comment on this video, tell us what part of it is going to be able to help you with your financial journey, and then respond to the Google form down below if you want to have an opportunity to show up on this show. Let's take a listen to the CEO himself.
So we're going after millennials and Gen Z that fit that demographic. Our hope is over time we can serve a broader audience, but we have to be focused on one core target, now with them, and then expand. We're really seeing great adoption at the top of our funnel through everyday products like SoFi Money and people putting their direct deposit with us. That gives us a lot of information to help you better manage your money. We may know if you're overspending and help you manage your budget through a free certified financial planner. We may also know that you're paying a student loan that's at a really high interest rate and you can refinance. Or you have a bunch of cash sitting there doing nothing, and we can help you with invest that money so it starts compounding.
That's the most important part. You have a bunch of cash sitting somewhere and it's not going anywhere. That is the target demographic of people that fit that bill, right? Once you get a little bit of a foothold in the world of investing, in the world of financial freedom, you're likely going to already have someone telling you what to do. Probably a financial advisor, which I am not one, by the way. However, the most important part of then coming back to it is, who do you trust? And SoFi is trying to talk about the case of David versus Goliath. So we're seeing David's success here. Retail investors are wielding substantial power in the equity markets, and it doesn't lie. You zoom out from today, we have 17% up today alone, but you go out to the hourly and you'll be able to see a significant rip from the $19 ranges all the way up to $24.65. So that has been SoFi's journey for the last few days, and it is only going forward from here. Why is that? Let's take a listen to the types of analyses in this doc. Socially selected stocks through SoFi. All right, the SoFi Social 50 ETF is composed of the top 50 most widely held US listed stocks on SoFi Active Invest. Stocks are rebalanced monthly and weighted according to how much money members have invested in each company at the end of every month. So SFYF seeks to track the performance before fees and expenses of the SoFi Social 50 Index. Why sci-fi? Rooted in the wisdom of the crowd. Number 2, exposure based on the SoFi Active Invest community. And number 3, conviction-weighted 50 stock index. So I love how there is this is not going to get into the mathy section, right? But then that is the confidence in the calculation that they have already pumped. Number 1, the universe. Number 2, rank order. Number 3, top 50. Number 4, weight. And number 5, the reconstitution and rebalancing, which is the natural part of being able to turn over old mulch and be able to continue investing in the next money-making venture. People keep talking about like fads. People talk about whether or not metaverse is a fad. People talk about whether or not the EV wars is a fad. At the end of the day, it really ends up being, can you catch the right ships moving off to space at the right risk aversion levels? The case for sci-fi. How to use the 50 ETF, the SoFi Social 50 ETF. It provides access to crowd investing. It's designed for investors seeking diversified and differentiated exposure to what retail investors are doing, and it's more aggressive. So over here's the satellite. Investors are with a higher risk appetite may consider SFYF as a core equity holding, and of course there's a more conservative investors with a lower risk profile may wish to use SFYF to complement a more traditional core equity holding. Meme stocks too, look on the right here. Meme stocks are shares in companies that have seen a surge in viral activity, often fueled by online social media activity. SFYF's monthly index reconstitution provides access to meme stocks, while size limits have the potential to mitigate exposure to a single name. So it looks like that is part of SoFi's success stories, that they have differentiated themselves a lot in the financial markets and have also tossed their ring into creating ETFs that are giving you guys a better sense of rebuilding, renewal, and pushing to the next important part of the market. SoFi's Social 50 Index methodology has been designed with risk mitigation in mind. Stock choices and weightings are based on SoFi's self-directed retail investment platform. Monthly reconstitution. Okay, so we've covered it all here. SFYF embraces the wisdom of the crowds. It's a passive index-based approach to investing in a portfolio of the 50 most widely held U.S. equity securities in SoFi Direct Invest accounts. Portfolio names and weightings based on the wisdom of the crowds. Yes. Okay, tax efficient index-based investments. You guys know that the taxes are likely going to be the biggest weight on you guys. And at the end of the day, if you guys are coming back and understanding how certain ETFs make taxes more efficient, that's a huge part of the story. So SoFi is helping people achieve financial independence to realize their ambitions. Sounds very similar to the Mo Money brand. Our products are for borrowing money, saving, spending, and investing. Give our more than 1 million members fast access to tools. All right. There's Toroso here as well. Before you invest, some boilerplate, right? No guarantee of funds investment strategy. All good. And that's the little book case and point. Right now, we've already listened to how the SoFi CEO has been making the rounds on the internet. SoFi is getting huge. In fact, $24 and still holding on to that level since the beginning of this video. So if you guys understand that there might be a potential bounce off of the VWAP here, right here has been trending underneath it. It already caused one bounce earlier today from 23.57, so moving up to 24.05 to the next resistance to watch at $25.22. Something that I really think that is going to embody more lightweight coordination of financial freedom is the ability to access your money almost anywhere, right? So when I go to Europe, I'm definitely taking my SoFi card with me. It's just a differentiated way to be able to say, hey, I'm part of this financial world, I'm part of this financial world, and now the SoFi Social 50 ETF. Go ahead and use the link in the description to be able to get $50 on your own SoFi account. And this is just to invest in almost anything you want. So it's not like a free stock. It is exactly like free money to invest in some part of the market to get started. If you guys like this video, make sure to like it, or found some entertainment or education off of it, make sure to do that as well. Check out the ETF. I'm going to be doing a little bit more digging myself, and for now, but not for forever, I'll see you guys in the money. Hey, Jezebel, what's going on? Look at her blue wrench on the side. That means she is a mod, and she is now the most important person in this chat. How's it going? Good to see you. Cloud KR, we got Ivy Creek. We got a Manny G and Norman E. Okay, so RIVN, where is it right now? 18.9%, still up and running. Okay, let's see if Jim has any better ideas about it.
Electric vehicles are in a league of their own compared to old school auto companies that still rely largely on the dreaded internal combustion engines, or ICE as they call them. That doesn't mean RIVN necessarily deserves to be worth this much, but it does mean you can't dismiss it out of hand. Of course, the skeptics out there, well, they find this analysis absurd. They think that my analysis itself is sophomoric and soporific. Only 156 cars, for heaven's sake. But RIVN's stock price is set by buyers who believe that electric vehicles are taking over the world. And there are enough true believers in the money management business post-Tesla's phenomenal success to send this stock in the stratosphere, and it may not be done. What do these true believers see? They see a company that's built the world's first all-electric pickup truck. They see the electric SUVs. They see the electric fans on the way. I have to throw in a purpose-driven. You always have to say purpose-driven. More importantly, they see RIVN's backers. So let's talk about them for a second. As I mentioned earlier this week, Ford will soon be RIVN's biggest rival thanks to the electric F-150 coming out next year. Yet they own 12% of RIVN. Talk about an endorsement. On top of that, Amazon owns nearly 20% of this thing, and they've already ordered 100,000 vans. While Ford might cash out to build out its own electric capabilities, I, for one, hope they build a battery mega gigafactory. Amazon seems like a long hauler. The sustainability team is saying that
what did he say?
In every electric van they can get their hands on, not just 100,000. Now, it's not often you see a company with a sold-out production line before it even enters mass production. That is RIVN's pedigree. Now, you might say this is all ridiculous. I mean, did you see the action in the rest of the market today? The averages were atrocious because the market showed its true colors. Now, remember last night when I told you things were too confusing and the signals were too contradictory, so we had to wait for more clarity before we could make sense of the situation? Well, today we got clarity. The red hot consumer price index numbers, I mean, hardly unexpected, as I told you. Hey, everyone... I mean, how can those be revelatory? Yet it didn't matter. They still managed to send the bond market into overdrive and, of course, over a cliff. Yesterday, bond yields were going down. I figured that might mean, well, it could be a false tell, right? I mean, we don't know where bonds are going to go. What we do know is that if there's inflation, rates are supposed to go higher. And sure enough, today, bond yields surge because there's a new sense that the Federal Reserve needs to raise interest rates quickly in order to cool down an overheated economy. That's the true colors. Again, I expected the October inflation numbers to be hideous, but as I said yesterday, my expectations aren't what matters. You aren't either. You needed the obvious slap-you-in-the-face inflation data to provoke the beast, forcing it to reveal whether it's a bull or a bear. And today, the URSA did indeed turn out to be a major bear. Every growth stock that trades based on its distant future earnings,
a major bear,
slaughtered. Because that's the group that inflation hits the hardest. So you might wonder, why the heck wasn't RIVN slaughtered too? And then it only produces 156 vehicles, most of which were sold to employees. I mean, this thing reeking of the out years kind of thing that inflation hurts, right? It's trading on what it could make in 2030. How can a stock like that price at 78 and close at $100 when the market's turning against exactly this kind of investment? It's simple. Rivian's not rallying in spite of the growth stock sell-off. Growth stocks sold off in part because of Rivian, as investors sold large ones, sold off similar assets in order to get as much stock in as they could or participate in the deal. So you got to understand how the market works if you want to understand Rivian. Given all the interest in this,
We got CloudKR saying, hey, is Loopring going to keep ripping? I'm looking for a nice entry, but you know. Well, if Hybach is still here, he used Lux Algo to find Loopring's entry point. I interviewed him a few days ago, and that's going to be one of the Mo Money Moguls podcast parts that we're going to be able to release when I'm in Europe. So I'm going to giving you guys a shout out now. It's going to be fun, so that I can actually focus on a vacation, but I will still be coming out with news reports for you guys. Rivian, this is Rivian. Double topping, but now the overbought Bollingers are much higher, so Rivian has now consolidated at the $120 range. That is bullish for Rivian, but those of you who did not jump in might be feeling the FOMO. Let's take a look at Loopring. Loopring, tethered to USD. I believe this is where our good friend jumped into Loopring a few days ago. Wait, this is the 11th. This is the 11th. Let me get on the 15th. Oh yeah, there we go. So I believe it was around the dollar-ish range. Moving on to here, we had that sell signal from Lux Algo right in the beginning of the morning. Now a strong buy signal from Lux as we push at $3.14, already coming up to $3.45. I believe your buy signal has happened earlier today. If you don't want to miss it again, Lux Algo is in the description for 20% off. Sucks when we miss.
when the Rivian IPO was practically guaranteed to be red hot, it was inevitable that it would go to a premium. In other words, that it would go above where it was priced. How much of a premium? Again, this is where Rivian stock distinguished itself as an entity separate from the pummeled averages. Successful underratings are all about something called allocations. Who gets it and who gets shut out? Usually the company comes public, is pretty clueless about the process, so they let the syndicate desk be in charge. Normally that means lots of money managers end up getting sweet deals because the syndicate desk need to keep them happy, so they'll continue to buy new merchandise, they'll continue business. It's a reward. But this time it's different. This time, Rivian CEO R.J. Scaringe, he was able to call the shots because his stock was so in demand. So he decided to give it to the entities that would pay the most, the sovereign wealth funds and large institutions, not small-time hedge fund flippers or home gamers. He wanted to reward people who would stick with him, okay? I don't know the man, but obviously he's very thoughtful about this stuff. These accounts typically put in for 10% of the company's shares that are coming public. Obviously, they aren't going to get that much. But that's how you signal you want a ton of stock to the deal makers. So what happens?
Jess is going to have SoFi her hot girl summer. Heck yeah. It's about to be winter, but if you're in Australia or in the Southern Hemisphere, Cloud KR shrug. It's okay. I miss Loopring Shibu, but no regrets because I still hold AMC GME. Whoa.
Happens is these gigantic non-flipping institutions then get a nice chunk of the IPO, but because they're so darn big, they need to buy much more if they're going to have what's known as a meaningful position within their funds. So they come in after getting their allocation and then proceed to sell the shares of fast-growing techs. We saw that selling all day until near the end of the day, and then they buy more Rivian shares once they start trading. And that's how a company like Rivian, it's only sold what amounts to a handful of vehicles, can trade at the same market capitalization as GM. It's the mechanics of the market, people. Now, you can argue these institutions are insane. That given the inflationary nature of the economy, the Fed will have to raise interest rates rapidly, which will eviscerate Rivian's stock. No, that's short-sighted. It's absolutely true that inflation is way too high, and stocks are simply worth less than they were yesterday because their future earnings are being eroded. We see that data, we say, hey, you know what, we misjudged when we were very bullish yesterday. But Rivian is not just any stock. When Amazon reloads and reloads and then reloads again with orders, then you can make the case that this could be the next Tesla. And the next Tesla could easily earn $1 trillion valuation. And believe me, can we just accept that that's what people are chasing? Again, I'm not saying Rivian will definitely be the next Tesla. I think the future all depends on management's execution because mass production of electric vehicles it's incredibly difficult. And if it wasn't, don't you think the traditional automakers would have gotten in on the action a few years ago? Plus, I don't think this is really a game over for the stock market. Now, a scorching CPI number will have some lasting impact. Absolutely. It's been able to create several days worth of hand-wringing and selling when we've gotten them before. But ultimately, this could turn out to be what's known as a rearview mirror number. What if inflation's already peaking? What if the recent decline in oil and natural gas is for real and everyone's just ignoring it? What if the most basic sign of inflation has hit a wall? What if we're finally sorting out the port congestion problem? Not people working on it. What if housing continues to cool? You know it's starting to happen in a bunch of neighborhoods. Mortgages are getting more expensive. Then you'll be kicking yourself for not buying stocks here. The amazing thing, of all the stocks out there, RIVN might just become a safe haven.
Mountain Tactics says, if you get a chance, visit Montenegro on Adriatic coast. It's a hidden gem. My family's from there. Very cool.
It could become a fixture of the new tech world, at least until the lockup on insider selling expires in 6 months. And things can go a little tougher. So let me give you the bottom line. When you see a stock like RIVN exploding right out of the gate, you need to understand that it's not just that people believe in this electric vehicle story. It's also because the mechanics of the market are very much on the side of the bulls when it comes to RIVN.
All right.
Don't miss a sec.
He is narrating his own story, which is very fun. You guys know. So he talked about selling Disney as being short-sighted earlier. And I agree. I think that Disney is looking pretty tasty. It's a stock that's... listen, if you invest in Disney, it's not like it's going to go somewhere. I just invested in Disney at the wrong time. 6.2% jump in consumer prices. We're talking about inflation. That data came out a couple of days ago. I think yesterday. Let's take a quick check at what the Crames talks about.
Fuel oil, right? Now that's coming down. We know that oil has come down. They could do the SPR. Natural gas has come down below $5. And next is auto. And perhaps this is the beginning of a thaw of being able to get more chips. Now, Avnet, which is the largest distributor, told me that that's not the case. Farley is not weighed in with me today because we're busy talking about, obviously, the RIVN windfall. But maybe this is J-Pal's getting the break. That makes it so that he is not the GOAT of the game. Maybe he's going to end up being the GOAT, as in greatest of all time.
No.
People are still worrying about rent and meat, fish, poultry. We're moving on from the chip scare.
It's a big number, Jim.
I'm going beyond
6.2%. It's a big number.
It could be the peak numbers. Have you ever thought about that?
Yeah.
Are you saying that yet?
I'm
or
going
no?
peak.
You're going peak inflation?
Right here.
Really?
Yeah, I'm going peak.
You know,
Right
these
here.
supply chain issues are not going away. Just to
What are you,
let you
a
know.
Ford expert?
No, but I listen to all the CEOs that we have on, and I have the opportunity to speak to many others, not on television. And
I'm just saying,
getting worse. Most would say, rather
I'm
than
not
better.
going there. I'm trying to speak with San Francisco Mayor today. I don't think
Trying
that
to
it's
talk to
getting
the mayor of
worse.
San Francisco. He's going to fill you in on this.
She, President Xi and she.
Well, there's a difference.
President Xi became mayor of San Francisco.
It's the closest city.
For life.
They've taken it already?
They've taken it.
Or did we just give it to them?
No, they've taken it. It was like that really weird Edelweiss. Remember that one?
But Jim, to your point, there's a difference between peak and transitory, right? You're not saying these things could be around for a while.
I'm saying that it could be transitory, but there may be a auto, what you just said, and I think people should notice that oil stopped going up. The problem with natural gas in our country is where it's, from this, they have this Henry Hub, but the fact is that if we were allowed to build pipelines everywhere, then we would notice that we wouldn't have to import fuel oil.
It's actually, really quick, a good point, because there's a lot of commentary out this morning that the White House is trying to jawbone, right, on SPR or maybe a ban on exports, but they're just not good at jawboning on inflation.
Well, then what they ought to do is pack FERC with people who are in favor of pipelines, which happens to be a better way to transport energy than, say, trains. We could get in. This is a shortage of our own making. They won't drill on federal lands in New Mexico. There's a lot of oil in New Mexico. Now, anytime you come out with pro-carbon statements like I just did, your career's pretty finished. I just finished my career. I actually endorsed the idea that we should have more domestic drilling.
But what we have is capable of producing plenty, and the fracking that's going on right now.
We can produce 12 million a day. Well, we produce 9. We produce 12. It goes away.
Got to refine it.
Got to refine it, and we need carbon capture. We need Mike Worth on the show right now. Please call it. Chevron CEO, help me out here, Mike. Please, Scott Sheffield, help me out. I'm all alone.
Yeah.
Shepard Smith here. Thanks for watching CNBC.
Ship. That's the thing about Shep. So you can never expect him. Jeanette Salazar says, I love you, Professor Meatball. Me too. I really do think Meatball's a great one. Matt Hawkeye says he alluded to the question with oil. Yeah, it's important. Who is Rivian's billionaire founding R.J. Scaringe? I'm a little interested in that. Not terribly interested, but I'm a little interested. Sean says, Meatball, will I ever be rich? Don't leave Sean waiting. Come on, answer him. Let's see. BTS says, we do need that. I'm waiting for NAK to do something. Heriberto says Robinhood is down, as in the stock is down on the market, or the app is down in the app store. Loops Gene Munster is uncomfortable with Rivian's valuation. Okay, I think there's a bear coming here.
Take off even as the stock started trading. It priced at 78. It jumped out of the gate at something like $109, increase of more than 50%. Do you like this stock here? What do you think about the valuation? Why so much excitement?
Becky, maybe for a starting point, I'm a huge fan of EVs and the EV opportunity. I think Rivian's valuation is a full standard deviation outside of aggressive. I want to quickly put that into perspective, is that their vehicles sell for an ASP of $80,000. That's similar to Tesla's Model S and X $80,000 ASP. And those units on an annual basis have essentially topped out at 70,000 vehicles a year. If you apply a 70,000 vehicle delivery number for 2023, keep in mind it'll be about 1,000 vehicles in 2021. So if you ramp from 1 to 70,000, which is a pretty sizable ramp in 2023, that means that I didn't do the math with the up 9% in the pre-market, but that means that the valuation per vehicle delivery in 2023 is $1.3 million. Tesla, excluding all their energy business and insurance and other X factors, is valued 2023 at about $500,000. So when you put this together, this is trading at about 2.5 times Tesla's valuation, and does not have what I think is some of the other X factor upside around autonomy. It's not as strong with Rivian. Also the energy business, insurance, for example. So it does beg a question of why is this happening to Rivian stock, and can it continue?
Gene, when you lay it out like that,
it did continue.
I don't know that I've ever heard somebody lay out the vehicle. Like for Tesla alone, you say $500,000 per every vehicle that it's going to deliver next year. That seems crazy. Can you justify that before you even get to this valuation for Rivian?
Well, this is my opinion, is that you have to look at what the underlying growth rate is. And I think over the next 5 years, Tesla can grow at 50%. If you apply a 6.5 multiple on that 50%, that's the same multiple that Apple would get for its hardware, software, and services. Ultimately, I am in the camp, I think this can be a religious argument here, but the camp that EVs are ultimately computers on wheels, and this is a tech company, Tesla and Rivian for that matter. Mm-hmm. So when I think about Tesla and think about the long term, my opinion is this can be a $2,500 stock. But there is an important difference here with Tesla and Rivian, is that, as I mentioned, the average selling price, they start at 70,000, Rivian's vehicles, but their ASPs are going to be ultimately 80,000. Is that Tesla didn't get to that 50% growth number until they started to sell vehicles in the $45,000 part. And so undoubtedly, Rivian will have more vehicles in that. But I think that to answer your question on Tesla, I still believe that that 500,000 is justified given the size of the market opportunity. And in Rivian's case, it's a head scratcher for me. That anything's possible in tech. Again, we can talk about why it's going so high, but I feel I'm uncomfortable at what these valuations are.
Kathy Wood, too, who has been obviously a big proponent, a big bull when it comes to Tesla, has said similar things. She said she wouldn't have bought it at the price that it priced at $78, even before the jump you saw when it started selling. That's unusual. Now, to see all of these questions that are raised around this, I guess if you had to take the other side of this, people would say it's big backers. It's got Ford behind it. It's got Amazon behind it, and Amazon's going to be ordering a lot of their trucks. And maybe that's the instant partner that if they're willing to put their stake behind it, that there's something there. That, you know, they've only delivered 156 trucks. Most of those have gone to employees, almost all of them. For 2023, they even said in their own prospectus that they don't expect to fill the 55,400 orders that they already have till the end of next year. So you are talking about, or the end of 2023, I should say, you are talking about a long runway with some of these things. But people look at this and they look at the backers and they say, okay, there's promise behind it. Or do you think that this is a case where retail investors have jumped in and thrown even crazy valuations out?
I think there's two factors to this. I think one side is institutions were there from the beginning at this $50-60 billion valuation. And the reason why they participated in Rivian versus all these many other EV companies, most of them SPACs, is that, as you said, institutional quality. You talked about their investors, Ford, Amazon, but that gives big companies like T. Rowe comfort that this, in fact, is going to be around for a long time. And then you throw in the X factor, which is the fear of missing out, the fear of missing the next Tesla. And there's some very loose math that I think goes on in some investors' minds that if this is a truly institutional quality and the potential to be the next Tesla, Tesla is a $1 billion market cap, therefore Rivian needs to be a 10x from current levels. There's probably some loose math around that. I don't think.
Okay, so Rivian, overvalued according to a bunch of smart money, old school money people. Apparently that was before the 124 rip and going 123. Rivian is going. Rivian is ready to move. Disney and Rivian, RIVN. Rivian is running is going crazy. Let me switch this. I would say this is an explode. Alright, Rivian, where are you going? We were looking at QS earlier. Someone was asking in the chat. QuantumScape, with their solid state batteries, looks like they've mustered up some positive news in the last few days. A little over bullish as they got knocked down at 38.87, back down to the support that they saw 34.13, acting as support for the first time since last time it was resistance. Now coming back up to 38.87. That's going to be a hardcore resistance. Probably not going to be able to push past. So is this a stock on its way back down, or is it going to try to hold there before moving up? Let's see. BTS says Lucid did this too during the beginning. They speed like a rock for months. Drop like a rock. Workhorse. Roman Gutierrez want to talk about Workhorse. Workhorse up 6.5%. Looks like the third day in a row that they've been up 6.5%. But just kidding. They were 6.5% up and then down, up and then down. Now they're holding 6.5% up. Let's see how much longer. Understand Rivian with a former company board. Oh, Black Rifle Company is going public. Some of you have been talking about it in the chat. Let's hear what's going on here.
That's right, David. So on this Veterans Day, we're here today at Black Rifle Coffee Company. This is a veteran-founded, led, and operating business with a lot of buzz and momentum.
Veterans
Evan
Day.
Hafer, a former Green Beret, founded this company 7 years ago with a very clear mission, serving premium coffee while supporting veterans and their families.
When I go to work every day, what charges me up is knowing that I have an opportunity to build something that creates that infrastructure support for guys like me.
Today, about half of the company's roughly 600 employees are veterans, reservists, or military spouses. It has also set a very bold, long-term goal for itself to hire 10,000 veterans. That requires, though, a lot of money. So Black Rifle Coffee has agreed to go public through a merger with a SPAC. That transaction is going to provide the company's balance sheet with an additional $225 million in cash, which Evan Hafer will use to aggressively expand his footprint of physical stores.
You can create more employment opportunities in physical locations throughout the communities of the United States. That becomes
This guy looks kind of familiar. Looks like a face that I remember. PUBM. Let's take a look. PUBM on the 15-minute chart looks pretty much like a strong buy signal has just begun. So have you just caught a strong buy signal on this show? Let's see where it started on the 5-minute chart. Yeah, basically right now. Weirdly enough, on the 5-minute chart, the next spot, the fourth level of overbought over here in Bollinger's would be about 42.21. So you're looking at $3 up. That's not much of an upside. However, a strong buy signal is a strong buy signal. Pubmatic on Lux Algo. If you guys want to check yourself, make sure to grab it in the description. You still get 20% off with the code AndrewMoMoney at checkout.
Really big funnel to bring in thousands of employees.
Now, we know the company has made headlines for other reasons too, though. A rider on January 6th was photographed wearing a Black Rifle Coffee hat. Kyle Rittenhouse on trial for killing 2 people during a BLM protest last year, photographed wearing a Black Rifle Coffee t-shirt, reportedly when released on bond. But Evan Hafer distances himself from these events, telling me that Black Rifle Coffee represents no particular political party or movement. Back to you all.
Josh, we know who the Black Rifle employee is. Who is the target customer?
So it's interesting, if you talk to the company, when they talk about their customer, it generally skews more young, male, higher income relative to the general population. I was talking to another executive here, and I asked him, who he thinks about when he's thinking about his customer. He told me it's a veteran, it's a blue-collar individual. He told me with solid income, probably driving an F-150. You look at this company's growth, though, as I said, this company was started in 2014 in Evan Hafer's garage. 2015, he was doing about $1 million in revenue. You fast forward to this year, this company's going to do $230 million in revenue. That's a 40% year-over-year pop, guys.
40% year-over-year pop. Okay. I think the last thing about
Disney reported its fourth quarter numbers last night, and the stock is off almost 5% this morning after missing Wall Street expectations and disappointing streamer subscriber.
So Pubmatic. Oh yeah, we just talked about Pubmatic. Oof.
Subscriber numbers as well. Joining us right now to talk more about it is Tom Rogers, Engine Media Executive Chairman, the former president of NBC Cable, and the founder of CNBC. Of course, he's also a CNBC contributor. And Tom, let's talk about this. There's a lot of focus on Disney today. The upside had been all of those strong subscriber growth they got for Disney Plus during the pandemic. Downside is, look, that growth has really dried up to a huge extent. What do you think that means for the stock?
Well, first, let me say Happy Veterans Day and a shout out to my 95-year-old dad, ex-Marine and Korean War vet. I think Disney's earnings are not quite time to call in the Marines, but they got a lot of issues here. Look, this is a stock that has traded off of a headline number, their streaming sub number. And that streaming sub number for the last few quarters has really been driven off of Indian Hotstar subs, which are really cheap subs. But what was very apparent last night is that this is a function of cricket in India, much more than it is a function of Disney Plus. And as I have said all along, as a result of that, this is no way to measure the success of the Disney streaming service. It wasn't the way for investors to look at it when those numbers were going up. And last night with the Hotstar numbers not only not contributing but declining, it's no way to measure the success when those numbers go down.
Well, what is the way to measure the success if we can't look at the subscriber numbers?
Well, the way to look at it is one, the amount of engagement they have, two, the revenue per sub, three, the extent of their program budget going to streaming, four, how much of their movie shoulder they're really putting behind the streaming service. Those are far more important to their overall success than this headline number driven by Indian subs. Now, I will say, and I got to get this off my chest about Disney, and this is probably the quarter to say it. This is a company with a market cap of $300 billion, driven off of headline number of subs, mostly Disney Plus subs. And we have no idea every quarter how many U.S. Disney Plus subs there are. Ultimately, analysts piece that together. But they aren't there talking about Disney Plus domestically. We know it for Hulu because it's a U.S.-only service. We know it for ESPN Plus because it's a U.S.-only service. But here we are not knowing how many subs they get from the Hulu, ESPN Plus, Disney Plus bundle. We don't know what the U.S. domestic growth is. And when you reiterate 230 to 260 million as your number,
by
without
2024,
knowing,
right?
For 2024, exactly. Without knowing what percentage of those ultimately are going to be these Asian Hotstar 50-cent subs, or to what extent the percentage is really going to be comprised of U.S. subs, I don't put a lot of weight in them reiterating that number.
Okay.
Shepard Smith here. Thanks for watching.
So I'm looking to whether or not
Morgan Stanley.
Disney's a good buy. I don't see the buy signal other than the soft one from 161, and that has just consolidated sideways on the minute chart. On the anything past the minute chart, you're just not going to see any buys. Maybe on the 3-minute. Yeah, not even on the 3-minute. So that's why we don't look at two experts discussing whether or not Disney's a hot buy right now.
Ben Swinburne and Morningstar's Neil Macker. Ben, let me start with you. I read your note this morning. On the cost side here, I thought it was interesting that you did raise what you estimate in terms at least will be Disney's need to ramp up content and therefore the content spend. How does that figure into your overall view of the company and its prospects?
Look, I think at the end of the day, if you own Disney stock, and obviously today with the pullback, we think it's gotten more compelling, you believe they can build a big and profitable streaming business. And so the prize, as we highlighted in the note, is that as we move out of 2024 and beyond, that is a big business with real scale and real profitability. The cost to sort of scale to that point, if it's 10 billion instead of 8 billion in the grand scheme of things, I don't think is a thesis changer for the stock. So I'm not shocked. I think the key is that they deliver on the top line to make the stock work rather than the cost to get there.
Right. You called your note the cost of doing business. You still have it as an overweight. Why?
Well, I think if you go back, David, a year ago, between November and the end of the year, we had the vaccine news, we had their investor day where they raised guidance. Disney added $100 billion of value in basically 2 months. And that's the market pulling forward and pricing in a lot of success. I think you fast forward to today, as you can tell from the stock and what you read and research, there's a lot of skepticism. So in terms of what's priced in, I really think now, if they can deliver on their outlook, you can make real money in this stock. And the risk reward's actually gotten pretty compelling. Compare Disney to Netflix. Netflix is trading nearly at 30 times 2024 earnings. Disney, as of today, is cracked below 20 times. And we believe that Disney has the brands, the IP, and frankly, the track record, having gotten to 120 million subscribers already in just 2 years, to execute on their vision.
Yeah. Neil, you seem to be one of the skeptics. You've got a hold rating on Disney. What did you think of the results, and is there anything that would change your mind on that?
Yeah, I think from my point of view, I agree that Disney has a great set of IP and things like that. I thought the results were largely in line with sort of expectations. A little weaker, obviously, on the sub number here, but as I said in my note, you look at the number of subs that Disney's put up over the last year versus Netflix. They've tremendously outgained them in that area, and they're still adding names there now. One of the reasons we're holding is what Ben just talked about here, is we do think there's been a large pull forward of the value here, and while we like, at our fair value of 170, we think that, holders should still hold the name. We do think that we'd look for a little bit more clarity on, how quickly they're going to ramp out some of these other names, and how quickly the local language content will be spread over a number of countries. Remember, Disney's already been making a ton of local language content in their India and the Hotstar one. Is it all going to be mostly in India? Are we going to see more things in Korean, in Mandarin, Japanese, Spanish? Where is this local language coming from? And we think that's going to be a big point of focus going forward for the company in terms of how they're going to build out and compete with Netflix and Amazon around the world.
So let's just dig into that a little bit more, because it does seem like, and we've certainly been talking about this really ever since the rollout of Disney Plus, that is the narrative, the dominant narrative for the stock. But Neil, I mean, the other businesses are showing signs of recovery, because Disney, after all, is a media conglomerate, right? I mean, you're seeing the recovery taking root in the theme parks. You're seeing it with advertising around sports programming coming back as well. You're seeing it with theatrical releases. I mean, why is that being overshadowed by the Disney Plus narrative and the fact that we have seen this pull forward and slow down in subs?
Yeah, but I think that's, if you look back at Disney over the last 5 years, that there's always been sort of an overwhelming narrative that takes over the media piece. Go back 5 years ago, it was, how are linear subs doing in the United States? Worrying about cord cutting and things like that. Now it's streaming, and that seems to be what's pulling forward. Look, we think that the parks business is on a way to recovery. We are still a little worried about the linear business, not as worried as, let's say, people were 5 years ago, but we are still seeing declines in subs there, and that's still a large part of their business, especially on the sports side. How are you going to manage that transition to ESPN Plus and get those, $7, $8, $15, from the total ESPN Disney package from the cable distributors? How are you going to get that directly for consumers?
Yeah, Ben, I mean, it isn't that long ago that we did focus a lot on ESPN subs and the loss of those subs. Is that still a concern to you? Where do we come down on sort of where they stand right now in terms of the linear networks, which continue to generate an important part of the cash flow for the company?
Yeah, they pay the bills, David, and I think particularly as they're burning cash in streaming, owning those assets is quite a positive. I'd rather have those than not have those, given where they are in the cycle. And particularly with sports. I mean, again, as we think about the streaming landscape, our view globally is that we have 1 billion pay TV households moving to streaming over the next, call it, decade plus. Sports is a huge part of that market. And it's actually an area where, again, just to compare to Netflix, that Netflix is not in and Disney is in. I'd much rather be making the pivot into sports streaming, owning ESPN, than not. So it's a cash cow. There's no growth there, but that's not a big shock, I think, to anybody.
Shepard Smith here.
Gosh, it's hard to cut Shep off at the right time. Shep? So, talking about how to play Disney after Q4 missed earnings. Also, I'm mad at Disney. What's happening? How could the mouse be wrong? Now, let's take a listen to inflation data turns up, heat on Fed to taper even faster.
The surge in the October Consumer Price Index is now raising some more questions about how and when the Fed could take some action against inflation. With that story, Steve Leisman joins us this morning. What do you think, Steve?
I mean, there's talk that the taper, Andrew, even before it's begun, could go faster than first announced. Wall Street economists speculating the rapid and, as you said, more widespread inflation reported yesterday for October could prompt the Fed to a quicker reduction in asset purchases, and that would open the window for faster rate hikes. Robert Dye of Comerica Bank was just one of the economists who wrote yesterday something like this: it's possible that persistent inflation will cause the Fed to accelerate the tapering of asset purchases this spring in order to lift the Fed funds rate from the zero lower bound sooner rather than later. Now, the Fed itself allowed for this possibility when it announced the $15 billion monthly reduction in that $120 billion in asset purchases. That happened at the meeting earlier this month. It said in its statement, quote, "The committee is prepared to adjust the pace of purchases if warranted by changes in the economic outlook." And we'll see if Fed folks think that's true. At the current pace, the Fed would finish the taper by May. Now, if they stick to their plan of tapering before they hike, June would be the earliest possible month for a hike. So how do you gauge market sentiment? We'll look at the speed of the taper. How do you gauge that amount? Is watch the May and June Fed funds futures rate. The May contract trades at 18 basis points. That equates to a 38% probability of a 25 basis point hike at the meeting. The June contract, 24 basis points, equals a 63% chance. So they've both been rising since mid-October, suggesting the market thinks the Fed will be more aggressive. Now, while economists entertain the possibility of a speedier taper, it's mostly not their base case. There's still some belief you get more workers off the sidelines, supply bottlenecks clear, bringing down inflation before the Fed has to hurry the process. But that October inflation report suggests the window is narrow and closing fast, Andrew.
Thank you, Andrew.
Shepard Smith here. Thanks for watching.
That's me. I'm Andrew.
Dow's down 60. Let's get to Bob Pisani. Hey, Bob.
And Disney's down $14, and that's 100 Dow points, and that's why the Dow is down and the S&P 500 is up. Take a look at the sectors. Nice bounce back here for some of the major groups here. Semis, 1 day down, and now all back up again. Consumer discretionary back up. That's because Tesla's bouncing back, Amazon's bouncing back, the car companies are doing well. Communication services, that's Disney right there, so that's why it's sort of flattish. Materials are doing better because copper companies are doing a little bit better. Freeport's bouncing back. And there's the banks again. Still no impact about these inflation concerns. I'm going to get to that in a minute, but my head's spinning from all these IPOs this week, guys. I counted 17. There's a whole bunch of people going public right behind me. Several companies. One of them are Weave Communications, interesting company. They do customer communication software. One of the rare companies pricing below the range at $24. This hasn't happened very often recently. People have been getting the high prices again. But my heavens, there's a wine company, Wink, going public behind me. There's a bunch of them at NASDAQ, Lulu's Fashion Outlet, a couple of other companies out there, Backblaze that's going public on the NASDAQ. It's a record year. 372 IPOs. That's not the record. The old record was about 500 in 2000. But in terms of the amount of money raised, we're already in record territory, 168. That includes direct listings. That's far and away beats the old record. So, and we're not even done yet. And normally it starts slowing down. It's not slowing down. It just keeps going and going and going. And a lot of the IPO people are having trouble just keeping up with the research on what you need to do to know what these companies are doing. Meantime, Jim brought up the main debate.
It's actually the best way to be able to confuse a bunch of analysts is just have a ton of stocks rip at the same time. So now everyone has to work overtime trying to understand where these stocks are headed. Yeah, take a look. Bed Bath & Beyond up 5%. Avis up 7.5%. You got Netflix up 3%. Sava is up 6.5%. We got Qualcomm is up 3%. We have Sundial up 5.5%. GSM up 5.5%. Newegg up. When I was looking at it, up 10%, but now it's already losing its lead. Newegg is already coming right back down. So let's take a look at Disney crossing through 164 soon. Just topped at 163.80, coming back for an even further pullback.
As always, what everybody's talking about, which is this peak inflation right now, and how much inflation is there? This is very well studied on the stock market. Generally, a little inflation, stock market is fine with that. Stocks outperform 90% of the time when inflation is below 3% and still rising. That's an old Jeffrey studies, but there's a lot of studies out this over many decades. Where we have problems is when it starts going suddenly very fast above that 3% range and then stays there for a while. That's when you start having problems. But sectors that do well, it's pretty obvious. Energy does well in a high inflation environment because they can raise the oil prices. REITs do well because they can raise rents. Tech tends to hurt a little bit because they have high expected cash flows and they have lesser value, the discounted value when interest rates rise, and banks because inflation erodes the present value of loans. But none of this is happening yet, guys. Nobody is selling these sectors or buying them based on inflation expectations because there's still the debate about the transitory nature of all that. So we'll keep an eye on that. Finally, guys, different topic, but it's a big day. This is decision day for the Bitcoin ETF. Either today or tomorrow. They have until November 14th, and this is no longer punted down the road. They have to say yes or no to the Van Eck Bitcoin application. That's the first of many that are standing in line. Pessimism abounds about this. Gensler has made it very clear that he is concerned about all of this, about a spot Bitcoin ETF, because he doesn't believe he has an adequate regulatory authority over the crypto universe, particularly things like the crypto exchanges. And Carl...
It's against us. Like, I don't think I have regulatory.
As you know, Bitcoin futures have been approved. We've got two of them. That main one, the ProShares Bitcoin Strategy ETF, has been trading for a while, $1.2 billion in assets. But Carl, the ETF community, which is more pragmatic than the crypto community, is very pessimistic. They don't think that Gensler may even not approve it next year until he gets some regulatory framework around that. Carl?
He's like, listen, Carl. All right, Elon Musk sells more than $1 billion in Tesla stock, but this doesn't really explain the bounce. Honestly, the bounce is best explained by the fact that the other EV stocks are running. So Tesla, if you're the one down, that means the one losing. No one wants that. Disney Plus. The Disney Plus news. Talk about the metaverse. RIVN and Tesla point the way to massive transformation.
Shares of EV truck maker Rivian ended up yesterday 29% higher in its first day of trading. Shares are in the green again this morning, putting its market cap now above both Ford and GM. And joining us right now to talk about this and so much more is John Doerr. He's the venture capitalist and chairman at Kleiner Perkins. And he has a new book out. It is called Speed and Scale, an action plan for solving our climate crisis. But before we get to that, I do want to get your thoughts on what has been these remarkable valuations for companies that are, frankly, not just in the EV space, but relate to your underlying narrative around climate, John. Do these valuations make sense?
Well, rather than comment on any of the individual valuations, I'll say the electrification of transportation is one of the 6 largest trends that we're going to experience as we move from the fossil fuel polluting economy to the new clean energy economy. Rivian, as you know well, has an order from Amazon for 100,000 of its vehicles starting delivery in 2023. I think Rivian, Tesla, they point the way to a massive transformation. Some 2% of vehicles on the road globally today are electric. And the book argues, and I believe, we're going to move to nearly 100% of our vehicles powered by batteries.
So, but John, as a venture capitalist who's talked about this as an inflection point in terms of investing in climate that feels to you like something like the internet in the early days, what do you think that when just in the vehicle space, I'm thinking, how do you look at the quote unquote TAM, the total addressable market? Because some people say, look, you really should just look at how many automobiles are on the road and assume they all get replaced by EVs, and that's the market. Well, if that's the market, the valuations actually don't make sense. But if you start to believe that the vehicles themselves potentially become, battery-powered generators for people's homes and all sorts of other things, then the dynamic shifts, I think, a bit.
Well, I'm in the camp that believes they will become energy reservoirs and will change the way we live in a new low carbon future. President Biden declared that he thought the F-150 was a powerful innovation, and this will not be limited to the new companies and new ventures alone. It's a trend that has the entire global automotive industry on notice. One analyst has estimated that the value of the market for just the electric batteries is $400 billion a year for the next 20 years. So we're going to replace this oil and gas infrastructure with the electrification of transportation.
And you think it's done through vehicles. So then my question as an investor, we have a whole list of stocks. I don't know if you can see it on the screen: Tesla, Lucid, Rivian, Fisker, EVgo, and others. Do you think that people should think about this as a portfolio approach, meaning bet on the whole system and hope a couple of them win? Or is it more targeted than that? Is it not?
I'm reluctant to give other people investment advice. I'll tell you, my own approach is to try to focus on the winners, the ones that have the best management teams, the best strategic relationships and the best technologies. But the overall message here is, some would say this is a bubble. I'd rather say it's a boom. And booms historically have led to overinvestment, but also to massive shifts in value, to full employment, to rapid market development and competition. We're seeing all that. Turning to my own investments, I fully disclosed them in this book. It's resource number 4. But the point isn't so much making money on the investment as it is swiftly and successfully transforming the economy, the way the internet transformed the economy, to this new climate conscious era.
No, it's a mistake to sell Tesla on the dip. Yeah, that was from a while ago. So there it is. EV markets right now.
The story is still the movement.
EV markets right now starting the EV wars. Notable winners: QS continues to move upward 10.5%. SoFi still at $24 where we left it. Pubmatic up 13% now. So we just got that buy signal on Pub, and now it's moving. It's back to AMC. Cellar Door, how's it going? Meatball is the dog. Sydney Stewart wants to check Ortex for Fannie Mae to check the short interest. Sure, let's take a look. Ortex. Let me see if it's on NYSE. Probably not NASDAQ. FNMA. NASDAQ it is. Oh, interesting. Okay, instead of Ortex, I'm gonna take a look at Lux. Wasn't on NASDAQ or NYSE, which means I couldn't imagine the third. Fannie Mae. Let's look at it slightly out. Look at the 30-minute chart. Yeah, coming up from 92 cents. Top red $1.02. It's been a strong buy signal for on the 30-minute chart since the 9th. No, on the 27th of October. Good day. What's going on? Set up a portfolio with Meatball and pick stocks with his pause. That's a good idea, actually. Alrighty. What else are we seeing here? So this is the market overview on Ortex right now. Let's see. Yeah, Ortex looks very small. It's not full screen. Let's see. Mercy Health agrees to settle suit. Oh, miners could need to double CapEx to meet decarbonization goals by 2050. Cool news. Carnival Cruise Line solidifies its leadership. Oh, the news is just coming minute by minute. You can filter the type of companies, I guess, but do I want news every minute? Let's see. AAA predicts Thanksgiving travel to rebound almost pre-pandemic levels. Ooh, AAA data. On Robot makes software debut with Weblytics solution for collaborative. And claims he was pressured to plead guilty in lottery scam. Okay, now this is the problem with, let's filter see some AMC news. I'm assuming all the AMC news is going to be about... No. Interesting. Good morning, Andrew. Good morning, my hairpiece. Can we look at AMC stock in closer detail? Heck yeah. Focusing. Let me get rid of the MACD. There we go. Let's use our eyes and focus. Got the GME. GameStop. Markets have been really kind to people who invested in October. Meatball has it all worked out. Invest long in those with a wide moat, sit back, have a nap while the gains grow over time. Sit back, relax. Luis Kempen says, loving the vibes here. Them's the vibes. That's what we're going for. Let's see, so scrolling through the news to see if there's something worthy of chatting. ZipRecruiter stock jumps 12% on quarterly results. Jeez, these earnings are just going ape right now. INM seeks stay on proceedings taken by two former executives, BSP, to consider robust Q3 growth in reviewing targets. Oh, AMC's running. One boom boom candle, two boom boom candles. Here we come. Love to see it happen. I'm a little sideways, but that's okay. Because AMC and GME have finally finished their sideways consolidation. AMC coming up to $39.93. That's 4.5% up. Right below that $40 mental barrier. Also has been some tough resistance. GME, on the other hand, has 210 as its next level of resistance. AMC waking up. Hello, knock knock. Good time to be alive. Smoking says Amy waking up. Gimme is following. Like gimme. Gimme. AMC building its way. GME might really just push the extra $2 it needs to get to 210. Doesn't have any natural stoppers on the way up. LFG is the part of the day we're waiting for. Meatball's relaxed. He's like, it's fine. $39.96. Okay, alright. Let's take a look at where AMC short interest is. It's a non-settlement day, so there's no live interest updates. I see how this is. Jimmy equals gimme. GME, Jimmy. Got it. $0.02 away. Pretty natural price movement so far. There it is, $40. Alright, now you guys know what to do. Slapping that like, dropping that candle in the chat, saying hi. Meatball gets the treat. Everybody is a winner. $40. That's all nearly 5% up on the day. $40 tap. It's a love tap. pretty positive place. Pretty positive place to say, hey, thank you guys for joining the show. We talked about a lot of the market. We talked about the fact that there is going to be a potential boom or bubble. So that was something that a lot of analysts were talking about. Whether or not this is a boom for now and there's going to be a pullback and consolidation soon, or a bubble. There's going to be more catastrophic ramifications of markets reaching ever new highs. Either way, make sure that you guys understand your risk profile is everything. Don't spend money where you wouldn't be willing to lose it, right? But understand that casting a wide net, just like someone said, it's Meatball's methodology, also gives you guys a wider moat. If this video was interesting or entertaining, educational, all of the above, I hope you guys leave a like on it, and we will catch you guys in the video, maybe coming out later today, maybe coming out tomorrow. But either way, I'll see you guys bright and early. Thank you guys for all of those of you who have made this show possible. The Moon Platoon, the Grillionaire, the Meatball, the Space Legends. Look at him right there. That's how he is every day. Happy to spend the day with you guys. We'll see you guys in the next one. Have a good one. And for now, but not for forever, I'll see you guys in the money. Peace.